Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Visa stock. We'll be using fundamental analysis via TIKR terminal, and then I'll put my cash flows into the DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are Visa? So Visa Inc. is an American multinational financial services corporation headquartered in California, United States. It facilitates the electronic funds transfers throughout the world, most commonly through Visa branded credit cards, debit cards and prepaid cards. Visa does not issue cards, extend credit or set rates for consumers. Visa provides financial institutions with Visa branded payment products which they can then use to offer credit, debit, prepaid and cash access programs to their customers. So essentially they facilitate the actual transactions themselves, and that's what their business is. The main competitor is MasterCard, so them two have a bit of a duopoly over that electronic funds transfers industry, if you want to call it that. Them two are the only main players, let's be honest, or the majority of the players. The company itself is listed on the New York Stock Exchange as a component of the S&P 500 index. Now let's have a look at the sales for Visa, and we'll start with the sales per business. So data processing makes up 53% of sales, service makes up 48%, international transaction 27%. Just realised that doesn't make any sense at all because the percentages go above 100%. So I'm just going to disregard that completely. That does not make much sense. Let's just go sales per region because that makes a bit more sense, doesn't it? So international sales make up 54%, the United States make up 46%. Just to disregard that sales per business, it's clearly wrong. But yeah, I'm sure the amounts are wrong, but the percentages are wrong. So you can see most of the fees are data processing and service, international transaction too, but the sales are pretty much 50-50 international versus US. Now let's take a look at the financials via TIKR terminal for Visa, and as always, 5 years worth of data, and we'll start with the income statement. So revenues over the past 5 years have increased by a pretty decent amount, to be fair. 2020 revenue growth was down. We all know why, what happened on that year, but yeah, double-digit revenue growth pretty consistently, apart from the anomaly year. So yeah, growing at a decent rate, and yes, so net income-wise, it's doubled over the past 5 years. Near enough double, let's just say. Awesome stuff, no complaints there. Shares outstanding wise, we have a decrease of shares by a decent amount actually. Let's top of my head figures, maybe about 10%. That's a decent amount of shares bought back for a company of its size. Cash on hand has increased over the past 5 years. Long-term debt, let's have a look at that now. That has increased over the past 5 years. Not by a lot though, so I can maybe take it on the chin. But yes, anyway, so retained earnings have increased as well. Love that. So yeah, we'll have a look at cash flow statement now. So let's have a look at free cash flow. So free cash flow is cash flow from operations minus capital expenditure. So these two figures added together essentially. And yes, that's increased by a decent amount over the past 5 years. Let's see how they've used the cash now. So yeah, buying back shares, paying dividend as well. And you can see this dividend has been increasing over the years as well, which is really, really good. Now to the ratios, and why do I like ratios? Well, because it tells a bit more of the story of the financials. Not just numbers on the screen, it gives percentages, and you can measure these year on year to see how business is doing. So return on capital wise, very solid and very stable as well, what I love to see. In the low to mid 20s, I'd say, that's a fair assumption for Visa, so that's a decent return on capital there for the business. Here it gets juicy. So gross profit margin of 97%. Wow, that is mega, isn't it? And net income margin as well of 50%. One of the most profitable businesses on the planet. Just epic stuff there from Visa. Current ratio way above 1, so that's solid. Dividend yield of 0.7% for anyone interested in that. Right, debt to capital wise, it's 33%, so not a lot of debt going on in the business, so that's pretty sound. But yeah, if you like the look of TIKR terminal, head into the description down below, use my link, sign up to TIKR, have a look at the platform yourself, use the global screener to look at tens of thousands of stocks worldwide on all sorts of different exchanges, have a look at the analyst estimates, transcripts, and yeah, of course, look at the financials as well. I'll absolutely love TIKR terminal. It's been aiding my stock analysis process for the past few months. Great bit of kit, and yeah, happy analysing when you go sign
If you are
up.
enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation education only. I will see you
Now
there.
let's have a look at the Genuine Impact stats for Visa. And Genuine Impact is a platform where you can research stocks in 2 minutes. They cover 15,000 stocks and ETFs on their platform, and you can download the app free today via the App Store and Google Play. So let's start with the value metric, and it's looking very bad on a value basis. Just looking expensive, and it is very, very expensive for all the stocks on the platform. Quality wise, it's looking very good though. Something we love to see on this channel. Very high quality business, high return on equity. Love it. Dividend wise as well, it's looking very good. We've been growing the dividend pretty solidly as well. So yeah, not much complaining there. So past growth, apparently it's been average. So yeah, take that as you will. Future growth is looking good though for Visa, and with the world going from cash to card payment, that does make a lot of sense, doesn't it? So yeah, some interesting insights there from Genuine Impact. Now let's have a look at the analysis checklist for Visa, and we'll start with the first pillar. So I want a business to be profitable, high returns on capital using low leverage. So return on capital wise, 24%, 5-year average, solid stuff. Margins wise, really, really profitable business here. So net margins in particular, 48%, 5-year average. What can I say? One of the most profitable businesses on the planet, and it's actually one of the biggest businesses on the planet, which is absolutely bonkers. Market cap of 450 billion, well, 445 billion. It's not a small company. It's got nearly 50% profit margins. Epic stuff. Free cash flow margin as well. Not lagging too far behind. Current ratio wise, we've got a lot more current assets on hand to pay current liabilities, so the short-term obligations are more than covered. Cash conversion cycle of -44. So essentially, the suppliers of this business are cash financing their business. Yeah, look up this metric if you want to find out more. I might do a video on it because it is very, very interesting. The highest quality businesses in the world have a negative CCC. Not all industries can have it, but it's usually online software-based businesses, and it means they can be very dominant. Let's just say that. Total debt to capital is only 33%, so not much debt going on at all. Proven ability to grow, revenue, everything's in the green. Let's just say that business has been growing very nicely. Great capital allocation, so long-term debt, they've issued a bit of debt, decreasing share count, we've bought back shares, dividend growth has been there, and gain on asset sales versus asset write-down to goodwill impairment is in the green as well. Essentially, I'm trying to measure if the business is writing off too many assets or goodwill, because this shows bad capital allocation decisions in the past, and this is just the way I measure if that has or hasn't happened. Not set in stone, but it does the job anyway. Quality score of 93%, all apart from one metric. So Visa, one of the highest quality businesses in the world. No one can debate that. Buy at a fair price. Currently, it's just looking very expensive. So P ratio of 35 and price to free cash flow 31. Very, very steep. Very, very steep. And my DCF valuation for a 10% return. Got a share price of $114 per share, and it needs to drop 46% from the current share price of 214. So look at the DCF now, and let's see where I've got these. Yeah, so I've got these estimates from TIKR Terminal. Yeah, pretty modest, to be honest, I'd probably say. Maybe this current economic environment, if we're going to a recession, they won't have much growth, so this could be even a bit over optimistic if they don't grow the free cash flow. But let's say 20 years time, we're going to keep growing that up because the world's going to card payment, and Visa and MasterCard, for example, are just going to be at the forefront of it. But yeah, so $114 per share is what I'm interested at, 10% return. So it just needs to drop. Let's have a look at the past year or so. So yeah, from February to now, it's dropped about 8. So it's not even dropped that much, let's be honest. Yeah, yeah, over time it's been a very good compounder as Visa, but put it simply, great quality business, just needs to drop like a ton of bricks. But yeah, when the business does drop that far, I'll be very much interested, and hopefully it does, because it's a very high quality business, and yeah, one of the best out there.
So there we have it, that was my full stock analysis for Visa. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching, I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.